Morning, everybody. John Napolitano here with you from Top Trading Pros. I am the options instructor here at Top Trading Pros, and my job here is to basically educate the public on options trading. I have over 20 years of institutional experience on the options side, as well as have been trading my own capital after that. So I have both institutional and retail experience to bring to the table. And I joined Top Trading Pros to educate everybody on options trading. A lot of people don't realize how great it could possibly be for your future and for your wealth and for your everyday trading. It's a great tool to be able to use. Options give you great choices. That's why they call them options, no pun intended. I think they give you both the ability to go long, go short, go sideways. And they also don't necessarily cause you to need that much capital. So options have all that ability, which is why I try to promote options as much as I can on this channel. They're a fantastic way to generate generational wealth. So that being said, all the stuff that's been going on this week, I wanted to create this video just to try to talk a little bit about how to trade during uncertain times and how to do a simple trade setup. So basically, obviously, we've had some trouble in the Middle East that comes from time to time, unfortunately. What the events that are going on are terrible, but the market largely seems to be shaking off the events of the Middle East for now, at least anyway. As long as it remains a regional conflict, the market really doesn't worry too much about anything else unless there's obviously contagion to other regions of the world. If Iran was to get involved, or if the US or Europe was to get involved and stuff like that, that would be a whole different ballgame. So that being said, the market's kind of drifted higher. We've had some mixed economic data on the unemployment side over the last couple of weeks, but for the most part, interest rates remain high. They remain elevated for longer, which is right out of Chairman Powell's mouth. So how do we navigate an environment like this in the options market particularly? Well, for those of you who are first starting out trading options, we have a wonderful program at Top Trading Pros where we have a free ebook. You could just go onto our website, toptradingpros.com, and download the free ebook or watch all of our YouTube videos, like and subscribe to this channel, obviously. We give plenty of free content to get people familiar with what options are and to get people's feet wet. On top of that, we offer a curriculum where we offer video classes. So if you want to just kind of at home at your own pace kind of thing, we offer that as well. But the bread and butter and the main gist of what I like to talk about is the coaching program we have. If you're really interested in being a trader, especially in the options market, it's important to have weekly coaching, to have a group of like-minded people like us to help you along your journey. So we offer that as well. So these are all the things that we bring to the table. If you're not familiar with us, so please check us out, toptradingpros.com. And I will jump into this one example just so you can kind of see what I'm seeing. So I have a stock here that some of you are probably familiar with. It's called Coinbase. They are a crypto exchange, obviously, and they're a very headline-driven stock. But as you can see, they are obviously in a little bit of a downtrend here, not doing that great. If you look at the volatility on this, so if you look at just by looking at these big candles, you can see that this thing really moves pretty fast when there's news or when there's something going on. Right now, the stock is currently trading below all of its moving averages. So it's quite bearish looking, actually. But again, it tends to spike. So what happens is if you look at just the general, I'm just going out about 8 days here on the options chain. You can tell the implied volatility here gets pretty crazy. It gets to 60%, sometimes as much as 50%, 40%. That's pretty high implied volatility. We're in a fairly low volatility environment. It's slightly elevated since the events of the Middle East and everything, and since the market sold off a little bit. But overall, the VIX is pretty subdued, or the fear gauge that we talk about in our classes. So what happens is, a lot of stocks get kind of complacent too on their volatility, but this one hasn't. So this actually presents a really good opportunity for something called a credit spread. It's not a trade that a lot of new options traders are familiar with, but credit spreads are a great way to generate income and to have what I like to call defined risk, where you're protecting yourself for any move that you don't expect. So I'm going to put this trade together for you. We have to come up first with our overall target. So what I always do is I look at this and say, well, where do I think this is going to go? Well, I think it's going to kind of stay where it is and maybe meander slightly lower, maybe test these lows a little bit. It already put in a high right here. So my guess is, just by looking at the chart, it looks like it wants to maybe test these lows or kind of stay where it is and kind of drift a little bit more sideways for a little while. So my overall take on this is sideways to down. I'm going to target basically where it currently is trading at $75. So what I'm going to do is maybe give myself a little bit of leeway and say to myself, okay, well, what I'm going to do is I am going to look for volatility and look for an opportunity basically where I can get myself a nice, nice return and not have to worry about necessarily losing too much money. So as you can see, the implied volatility somewhere around the 50 to 60% level. I'm going to go out about just 14 days. Now we talk about selecting time frames in our classes too. So this is where the coaching comes in. What time frame do I use? What expiration do I use? What target do I use? What strike price do I use? These are not difficult things to learn, but there is a process that I teach. And this is really, really important for especially new option traders. So in the case of this, I'm going to give myself a dollar space here. I'm going to set a 76 target. So basically, I'm going to make money as long as the stock stays below $76 by October 27th and kind of drifts sideways to lower. I should be in pretty good shape. So this is a 14-day trade. Now, if I just sell calls, we all know, a lot of you might know that naked calls are very dangerous. You can lose, you have unlimited loss if you just have the naked call and you sell this to receive $300 in premium. So what I'm going to do is protect myself. I'm going to say, you know what? I'm also going to buy the same time the 79 call option. So I'm giving myself $116 of credit, which I'm going to receive if the trade works in my favor. And then what I'm going to do next is I am going to see what my risk is. My overall reward is $116. My overall risk is $184 if I just set and forget this thing. Now we can obviously set stop orders. I like to personally kind of have a 1-for-1 trade. So it gives me over a 50% probability of it working. If it has a delta below 50, which this trade does because I chose 76 as the target, it's giving me a higher probability outcome than 50-50. And what I like to do is always set my risk parameters for a max loss of my, roughly what the $116 is. So I'm not going to, in other words, I'm not going to watch this thing go down to lose the full $184. I'll probably set an alert or some sort of limit, stop limit order in order to get out of this trade if it works against me. So either way, that is how you set up a trade like this. You would basically look at your reward, look at your risk, set up your risk parameters, and you would go ahead and fill that order. So this is what I mean by defined risk. Doing trades like this allow you to sit through volatility. They allow you to collect a premium while you wait for the trade to work out, and it allows you to move on to something else. And what's great about this is as long as you have your stop in place, you're going to collect that $116 at expiration on October 27th. And basically, you could just kind of do something else with your life. You don't need to watch the markets 24/7. So a lot of what I do involves these types of trades where they're not necessarily something you have to watch all the time and be glued to your screens. So what I tell my students is start slow, do a couple trades like this to get your feet wet. And essentially what you're doing is you're allowing another income stream to enter your life while you're still working your full-time job, while you're still trying to figure out whether you want to be a full-time trader or not, okay? So I hope this lesson was helpful. Please like and subscribe to this channel for more free content. Also check out our website, toptradingpros.com. Get our free ebook, subscribe to our newsletter, and check out our courses and our coaching, okay? Hope you all have a wonderful weekend and a great day, and I will talk to you guys soon. Take care, everybody.